Are you tired of buying breakouts that just instantly reverse on you? You click buy and boom, the market literally tanks in the exact opposite direction. It's incredibly frustrating, right? Well, welcome to today's explainer, where we're going to dive deep into the ultimate guide to the sniper entry strategy. Look, this isn't about guessing. It's about absolute pinpoint precision.
So, here's our roadmap for today. We're going to cover the sniper entry defined, filtering the market noise, breakouts and buildups, avoiding false breakouts, mastering the pullback, and finally, the power of context. Let's get right into it. All right, kicking things off with Section 1, the sniper entry defined. Think about your typical emotional trader. Honestly, they're kind of like a machine gunner. They're just firing off trades at every little twitch in the market, basically just hoping something hits the target. Today, we're swapping out that anxiety for a highly disciplined, patient sniper approach. The sniper entry strategy is an institutional-grade framework. The whole goal here is to bridge the gap between your higher timeframe structural bias and your lower timeframe execution. You're waiting for absolute precision. You're minimizing your risk while stretching that profit potential to the absolute maximum. Basically, it's about letting the market come to you. Moving right along to Section 2, filtering the market noise. So to really understand the automated logic that keeps us out of bad trades, we have to look at institutional mechanics. They demand what's called a triple alignment to filter out all that chaotic noise. First up, you have to establish a definitive trend bias using a higher time frame. This makes sure you're actually staying on the right side of the institutional flow. Second, look for liquidity sweeps. These are those tricky little moments where price briefly probes just beyond established highs or lows just to clear out resting orders. And third, you need to spot price imbalances or gaps that act as your pinpoint entry anchors. Without all three of these aligning, we just sit on our hands. Remember, holding cash is a position too. You can kind of think of these alignments as a strict security guard standing at the gates of your portfolio, keeping all the bad trades out. So let's test how we actually apply this practical playbook and exact setups right on the charts. Okay, Section 3, breakouts and buildups. Shifting our focus over to actual price action patterns, let's look at arguably the most high probability entry technique in a sniper's arsenal. Take a look at this comparison. We're looking at the safety of a buildup versus the sheer danger of chasing a naked breakout. When you trade a breakout that actually has a buildup, you get a really logical stop-loss placement, you get support from your 20 moving average, and you have undeniable proof of strong buyers. But a naked breakout without a buildup, man, that just leaves you with an excessively wide stop-loss and an absolutely terrible risk-to-reward ratio. You are completely exposed to a sudden reversal. But why does this actually work mechanically? Well, when the market stays in a really tight range just below resistance or maybe just above support, it's accumulating resting orders. Traders who are buying at support place their stop losses just below it. Short sellers near resistance, they have buy stop orders sitting right above it. So when the price finally breaks out, it triggers a massive cluster of these stop orders, literally fueling this explosive movement. You're capturing that exact moment of trapped liquidity. It's a beautiful thing. Here is your chronological step-by-step execution plan for these types of trades. Step 1, you want to see a market stuck in a range for at least 80 candles. The longer the range, the stronger the eventual breakout is going to be. Step 2, wait for the 20 moving average to catch up and support the price. This clearly shows us that buyers are willing to step in at increasingly higher prices. And finally, Step 3, once you have that really tight consolidation right at resistance, you set your buy stop order just above the highs and tuck your stop loss safely below the buildup. Next up is Section 4, avoiding false breakouts. Let's talk about the painful reality of the false break. This is the exact pattern that traps those emotional machine gunner traders we were talking about earlier. You need to burn this golden rule into your memory. Don't chase a breakout without a buildup. Seriously, if you see a massive sudden surge into a resistance level without any prior consolidation, do not buy it. No way. That is exactly how you end up getting caught in a sudden violent drop right after a seemingly strong move. In fact, if you see that naked breakout happen and the price gets aggressively rejected at those resistance highs, suddenly dropping right back below the breakout level, well, you actually have a false breakout set up on your hands. To capitalize on the trapped losing traders who chased and bought the top, you go short on the very next candle's open, and you place your stop loss safely above those newly formed highs. You literally become the sniper, taking advantage of the trap. All right, Section 5, mastering the pullback. So what if you completely miss that initial wave, but you still want to catch the trend safely? Well, this brings us to the first pullback checklist. A lot of new traders make the huge mistake of buying right in the middle of a massive bullish rally, just assuming it's an unlimited rocket to the moon. Instead, check this list. First, wait for the breakout to actually happen. Then, wait for a weak pullback. What does that mean? You want to see small-ranged, small-bodied candles just rifting lower. Finally, let the 20 moving average catch up with the price to guide you. That proves the pullback is just a healthy little pause and not a total trend reversal. And if you're drilling down into the 5-minute charts, you have two really specific ways to play this. The first is the break in retest. This involves waiting for a key level to break and literally just waiting for the price to pull back and touch that exact broken border, which is now acting as your new support. Alternatively, there's the retracement strategy, which utilizes Fibonacci levels. You measure the massive move and look to enter at those deep 61.8% or 78.6% retracement levels. Both of these methods aim to safely capitalize on periods of reversion.
And finally, Section 6, the power of contact.
Here's the undeniable truth about trading. Absolutely none of these patterns matter at all if you don't understand the broader market picture. So let's walk through this top-down sequence because it maps out so logically. You start on the weekly chart. Let's say it's in a clear uptrend and it's hitting a major support level. Okay, great. Then you zoom into the daily chart, confirming that the price is indeed reacting to that previous support area. Finally, you drop down to the 4-hour chart and you look for a break of structure. The market's shifting from making lower lows to suddenly forming higher highs and higher lows. This multi-timeframe synchronization, that is the ultimate secret to institutional success. So before you ever pull the trigger, you've got to run through this final context checklist. Are you actually trading with the dominant trend? Are you buying near value areas rather than just chasing price at the extreme top of a channel? And is there higher time frame confluence? Doing this ensures you aren't just blindly memorizing shapes and patterns, but you're genuinely reading the market's underlying story. You are now armed with the institutional knowledge to really elevate your trading journey and radically refine your entries. You understand the hidden mechanics of buildups, exactly how to avoid false breaks, and the discipline of multi-timeframe context. Which brings us to the final question I want to leave you with today. When you open your charts tomorrow, are you going to keep trading like an emotional machine gunner, just spraying orders into the noise? Or are you ready to be disciplined, filter out the chaos, and wait for that perfect sniper entry? The choice is entirely yours. Thanks so much for joining me on this explainer, and I'll catch you in the next one.